Action. Tim Arrowood here, People's Home Equity. How are you all today? So we're recording it for their other people, so I had to act like that was something. So first thing out of the way, I'm down 35 pounds. Just wanted to let you know that. So a high of 313, I'm 278. So that's pretty exciting. So my son got me a new belt for Christmas, so that's pretty cool. Sounds the little things, or the littler things, so that's pretty good. And there's plenty of notches. So that's the important stuff. So the rest of this is kind of downhill. So you lower your expectations. So I was asking about what's new. It sounds like there's an uptick in activity. How's that specialty sandwich? Good. Oh, yeah. So I was going to talk about a few things here, but we talked about, is there anything that's like top of mind about mortgages, any mortgage scenarios, anything that's weird that you heard from other people or other stuff that needs some clarification on?
I have a question.
Yes, of course you do. You're a great student.
So what about when nonprofits are purchasing a property?
Okay.
What process is that? Because I had a client today. They have a nonprofit and they have to have they're housing people. It's a recovery nonprofit. Mm-hmm. Is there certain stipulations for that?
You mean as a lender or as
yes, as a lender.
Well, it would be something that would be a commercial loan, so it would be outside of what I know everything about.
Okay,
but
it is commercial.
But it would be, in that, yeah. I mean, I have my own commercial loan, but that type of situation. I mean, I'm sure it's a nonprofit. There's trustees. There's different things. So that whole process, I don't know how the bank would look at that. So
okay.
Like it mainly be zoning.
Yep. Oh, okay.
Instead of financing side, it would just be zoning side.
Yep.
So I mean, they couldn't just buy it, even if the place looked perfect, if it's zoned like R1.
That's what I told them.
Okay.
Yeah.
Hadn't even thought of that.
B1 or 2 or whatever, if you want to use it for business.
So it doesn't necessarily have to go through whatever the deed name is, doesn't matter?
No, you can name it, Banana Corporation, it's like the deed name, it's what you're
As
going
long
to
as the
use
zoning
for
is
real
appropriate.
property for.
Yeah.
Okay, that's what I thought.
So that's outside of my area, but thank you for asking. Thank you. So, no mortgage scenarios, nothing like that? You just got weird ones sometimes, so.
I always get the weird.
That's all right. You keep throwing it to us. I can't do anything with some of them, but, that was the one that was like 40 acres and a single wide.
Oh, what was
That
that?
was been a while.
Yeah, the Jennings. Matt worked with them too.
Is that right?
Yeah. They
So,
just bless them.
bless their hearts,
I
yeah.
think they want to see everything.
Yeah. So one of the things that we're doing, like just with our past clients, and it's kind of a reminder because some of you are past clients, but also know a lot of people. So we're doing first quarter. I'm kind of focusing on refinances. So refinances, there's a couple different things. Some people, if they're sitting on a rate that's above 7, right now, which there's a lot of people are. I'm going through my past client database, and I've got people in it from 9 3/4 down to 8.5, those kind of things. So we're having conversations with them. Is now a good time? Should we wait? Because everybody's going to be hitting them up. So I'm trying to preemptively hit them and say, I don't think we've hit a good floor yet. So I think it would be best to wait. But if you say I want to do it now, then I'll do it. I don't want to say no. But I think that having that conversation. So anybody that that's thinking along those lines, keep us in mind. So that's a rate term, and then cash out. I'm doing a mailer that's going out this month to past clients, and some of you may get them as well. But we're doing a lot of cash out refinances right now. So people are sitting on a ton of equity, and they've accumulated a lot of debt. So yeah, they may be sitting on a 4 or a 3.5 rate, but if you take into account the credit cards at 24, those kind of things, your blended rate is still going to be better. So I saw my first car people. You're car people, right? And Jessica goes. So we had a client. I won't name any names. A client calls in. Past clients we've done 3 loans for. and they wanted to buy another place, and we're like, well, you got, one of the things holding you back is you got $130,000 of student loan debt. And this is months ago, and then they called up the other day and said, oh, we just found out our student loans were forgiven. Fantastic. So we pulled their credit. They have a new debt. They just bought a new Escalade. No, it gets better. A new Escalade. They traded in their Acura, right? So the Escalade cost about $150, and their loan was like $120, $2,000 a month payment, and they got all kinds of toys. Like whenever you pull somebody's credit, it's kind of fun. So it's like, oh yeah, you got this, you got that's the RV, right? Okay, that's the other car, and that's this, and so you just wonder about people. So just $150,000 vehicle, and an Escalade's nice, but if you're going to spend $150, do something exotic, right? I don't know.
Buy a Jeep wagon.
What's that?
Buy a Jeep wagon.
Oh, so can you even get the Wagoneer up to 150?
You can't get a Wagoneer, a Grand Wagoneer for less than 100.
Really?
Yes.
See, I'm out of this.
The Wagoneer start around 80, but
Right.
the Grand Wagoneer start around 150.
I had no idea. I don't want to know that. I don't want to know that. I don't want to.
Yeah, I learned from Tim the other day.
Oh my goodness.
He's got one. Or what was it?
Lexi got it right here. He was thinking about it.
I mean, if you can cash for it, I mean, you can do whatever you want. If you got that kind of bet, I'm like, these folks, I know their income, I know where they. Oh my goodness, leverage is crazy. So, yes.
Unless you're still on that property, I'm sorry.
Well, for you, we'll stop and do it.
The thing there's here all day. 2 properties, and I wanted to do a refi on the one that I have a higher interest rate on.
Okay.
And do a cash out refi to say get another property or whatever. Which property would I have to use the rental, or would I have to use the one that's considered the main?
You got a rental and you got a primary residence. Is that what you're talking about? Yes. So if you're keeping it as a main, the best thing to do would be to do the refi on the one that is your primary, because you're going to have the best terms. At lowest interest rate and the highest loan to value. So now, if you're at 90% loan to value on the primary and 20% loan to value on the investment, then you're going to be able to get more money out from the investment property. Does that make sense?
Yes.
Does that answer the question? So,
I don't know if I had like those. You had to do the primary.
no, it's just that the terms are going to be better for a primary. Whenever you're doing that, because I think my philosophy has been that if you're from the base standpoint, if you're going to, which one has the least amount of risk? Well, the house you're living in is probably going to have the least amount of risk. So, if the investment property, if you get in a bind, you're like, well, I'll just let it go. I mean nowadays you probably have equity, but it's harder to let nothing. It happens for people to let their primaries go, but you're going to fight for that a little bit more. So I think that's the reason. So. I actually got a refi right now that was referred to us by Credit Union, and it's kind of along the lines of this. I'm talking about different investment properties, but this is I've talked about non-QM loans before, qualified mortgages, non-QM. So a local bank says that they couldn't do this because his bank, his tax return said he made $70,000 last year or something like that. So we did a bank statement loan. So we took the last 12 months of bank statements, because he runs the money through his personal and all that stuff. So we went from him making $5,000 a month. So we did a bank statement loan. We're going to do a refinance on a $2.5 million house down in Newport. And now we find out that if we run the bank statement loan, that he makes about $54,000 a month. So we were able to, So now we went from, the credit union is like, no, we can't do that. To, yeah, we'll do that all day. So, the only other thing is this type of loan is one that's, they don't like rural loans. So he's only sitting on 2 acres, but it is in Unicoi. So Unicoi is, compared to a lot of these big non-QM companies, they're not in Kingsport, right? They're in California or New York, and they're like, yeah, that's rural. So that's a fight I'm probably gonna have to fight about that. But you know, he's doing a cash out refinance and wants to take out $1 million, maybe $1.25 million or something like that. So that's kind of exciting.
No question. So if you're able to do that, are you able to do that for new business owners? You know, usually they can be in business for like 2 years for some.
So you're probably going to need to be in the business. Well, it really, there's a lot of, that's one thing that I've learned about non-QM loans is it kind of depends. It's like they give guidelines, but we'll make an exception for that. We'll make an exception for that. So now this guy has been in business for a long time. Generally, you want to be in business for 2 years, but this is a 12-month bank statement loan. I'm pretty sure that he's going to need to be in business for 2 years to make that happen. But it is a tool for small business owners to be able to do stuff that they normally can't do, you know, just because. So, and that was the thing. I mean, he banks at this credit union. They take care of his business accounts and all that stuff, and they couldn't make it work. And so it's kind of cool. So that's one thing Misty and I have been talking to a lot of other loan officers about, you know, just those your turn downs, you know, maybe something we can figure out. So anyway, I thought that was kind of interesting. So I wanted to talk a little bit about investment property loans. Put a little something together here. Excuse me, I'm sniffing today. I'm all choked up. Haven't seen you all
So
year.
excited to see this.
So investment property loans, I was talking, for the longest time, I have, well, just different things that we can do and the pros and the cons of some of these. So I was talking to somebody the other day about doing investment property, and a lot of times I'll refer people to some of the local banks, like, she's done talks here before. Dana
Parkinson.
Yeah. First community. Yeah. And so I was I'll mention that to people. Said now, you know, if you're just getting started, sometimes they have these starter investor programs where you put 15% down, do maybe up to 6 doors, and I said the only thing that I had heard is that the terms were like 15 or 20 years. And I had somebody just last week tell me, oh, it's down to 10 years now. So the cash flow on a 10-year note is going to be, yeah, you can put 15% down, but you know, it's significant. It's hard to make that work on a 10-year note. So that made me think, well, I don't want to push people off of that if that's the case. So I haven't confirmed that, but that's something to think about. So when I'm looking at these, you know, the top one is the DSCR. We may have talked about that before. DSCR stands for debt service coverage ratio. So basically, your income is your income that you use to qualify is the property itself. So if you're $2,000 a month for income and your principal, interest, taxes, and insurance are $2,000 a month, we'll do that all day. That's a 1.0 DSCR. So we don't care about your income. So you know, it could be for folks that have a lot of properties where the banks are like, oh, you know, there's too many properties, you have too much leverage, I don't know that I like you. Maybe you've been with the bank for years and now you're at property number 10, and they're like, I think our portfolio is a little out of balance, we think we have too much with you, and then, so we could come in and you could buy property. We have to list all the properties that you own, but we just care that it appraises, that you've got a decent credit score, you got somewhere between 15 and 25% down, and the property will cash flow. So if you're buying a $315,000 house and it's the $2,200 a month payment, and it'll rent for $2,200 a month, we'll do those. So long term is easier as well, because many times when you're working with a bank on commercial lending like this, they want to see yearly income and balance sheets, so that they make sure that you haven't gotten in trouble. So we don't really care. So there are, you know, there's no personal income verification. It's ideal for investors with multiple properties. Irregular income, you know, so if you know, I've got somebody that they're basically retired, they don't have a lot of income, they're sitting on a ton of assets. We do that. larger multi-unit up to 8 units, so that might be something to consider. And then the one that, you know, if you needed to make it cash flow, we could do a 40-year term. So the first 10 years would be interest only. Excuse me. Still choking up over here. So the others are going to require, well, a conventional loan is going to be, you don't have to live in the property to do a conventional investment property. You're going to get better terms if you do that. And then FHA and VA are going to require that you live there. So the idea with, you know, going down to the conventional and the FHA, if you're going to live in a property with, let's say you buy a 2-plex or a 4-plex, you could put as little as 5% down and buy a 4-plex using a conventional loan. So you're going to get better rates. Yes, you in the front.
On the, like on a VA loan, it's been on used for purely investment properties. Could someone use a VA loan and they already have a property instead of moving? Could they use that home that they currently own and live in, that they're moving out of as an investment property?
Correct.
VA?
Absolutely, yeah. So you would retain that VA loan, and then you turn that into your departing residence into an investment property. And you can have multiple VA loans, so you could buy a new property. Like, you know, if you're young and you're just getting started with your investment portfolio, ideally you buy a property with 100% financing, you live there a year, and then you depart from that residence and you buy another primary residence, right? You turn the one you just left into investment, you can buy another one, you know, and move on to do that. And you can actually use the income from the departing residence if you've got a lease in hand, and that can cover the income that you need to pay that rent. So numbers have to work, but you can do that. I don't think you can have 3 simultaneously, but you know, we check on that because it depends on how much eligibility you have. But you can do, but that's a perfect method to build investment property. I talked to somebody the other day that they're like, I have a VA loan, past client of ours, and like we want to upgrade. I said, well, before we go too far, is this something you'd be interested in to look at retaining that as investment property? And they were young family, new baby, and they're like, I don't want that risk. Right? But you know, if you can make that leap, then it's a good fit. So, but you can do up to 1 to 4 units. So you can do a 4-plex with a VA loan, 100% financing. And the same terms apply for VA, is that, you know, it's very favorable, low credit scores, high debt to income ratios, and those kind of things. The FHA and the conventional, I did a video on this the other day, is kind of neat because not only can you put as little as 5% down or 3.5% down with FHA, but we also have renovation loans. So for both FHA and conventional, so you could conceivably buy a 4-plex that was a little rough that needed to be updated, and you can get the money to fix that up and roll that into the loan. So that's, I mean, if you like leverage, that you don't get much more leverage than that to be able to do a 5% down. You know, it's one thing to come up with 5% down to buy the property, but if you're to 5% and then you know, because you got 4-plex, well, you got 4 bathrooms, you got 4 kitchens, you got 4 everything, 4 heat pumps, and so if you're going to go in and, you know, to fix them up for the long term, you know, then it might be good to go get that taken care of. So let's see. I've been talking about the pros and the cons. Like on the DSCR one, the cons are you can't use it as a primary residence. Typically a little bit higher interest rates, maybe a point higher. So if we're at 7 right now on a conventional, then it might be 8. Might be not that high, depends on the credit score. Let's see, it's going to require a larger down payment, and there's a prepayment penalty. So that's something to keep in mind. Different companies have different prepayment penalties. Usually it's 1 to 5 years, and you can usually pick whether you want to do a 1 year or a 5 year. If it's 1 year, your interest rate's going to be higher. If it's a 5 year interest, it's going to be lower because the lender wants you. That's how they make their money, is to lend the money. And the longer they've got you tied in, then you know we're gonna get that one way or the other. So it really depends on what your long term goals are. So. Anything else that might be of interest? Is that, I think a lot of you, I've already talked to a lot of you about that. But you in the front, do you have a question?
Yeah.
You sure?
You covered it so well.
she just
gonna
went
fit right in.
yeah, right. Yeah, she likes that free lunch and a place to hang her hat sometimes at the office.
Yeah, you need to give her that Friday.
Yeah. Wow. They already like you more than they do me.
We're outnumbered here.
So anyway, these are for, as a reference for you guys. I think I handed some of those out. So I don't know. Any questions? Any thoughts? Any?
Anything from the Super Bowl this year?
Who I think's gonna win the Super Bowl this year? I have no idea.
Raiders. The Raiders.
Raiders? Okay, go Raiders. All right.
Tell us when a due on sale clause is enacted.
Ooh, do on sale clause. There's a technical version, and then there's the practical version. So due on sale, the deed is going to say, or the note, I think, is going to say when it's sold, then this note is due and payable. So, so I've talked to some folks about doing. They wanted to move their properties into an LLC or do something like that, and they're like, well, if I do that, then you can win this because you're on. So we just updated this. What we realized is that people were repulsed by just my picture on there. So we figured if we added 2 other people, then it would be then it might balance it out. So Paul's in the middle. Misty's on the good side. I'm on the low side. So it kind of balances out. So I mean, technically, I think that's going to happen when it's. What's the scenario that you were thinking about for the due on sale clause?
Subject to or move into an LLC or a quick claim. Like if you were wanting to just move it from, because I think technically even if you did something from, if I went to quick claim it to Joey, if there's some sort of position being given, they can technically kick it in to effect.
And that's the things that I've heard is that technically, yes, it is. If it's sold, if it's moved, ownership changes, then they have the ability to do that. I don't know that. I mean, I wouldn't tell anybody to do this because I don't know. But it's like primary residence. There's no primary residence police that says we're going to come around and see if you still live there because you bought this as a primary residence. Now, what happens is, like in your all's case, you wanted to buy another property. And so when you go to buy another property, it's like, well, you can't buy 2 primary residences probably in 12 months. So you have to wait. That might be a restriction, but there's nobody going to come around and say, hey, there's you're not living there. Let's deal, right? So, that is softer because it's there's no legal document that says, hey, I moved out. But if you file a quick claim, right? I don't know what kind of triggers those things are. I had somebody who was talking about a trust the other day, and they were saying, well, what they would do is they would they would contractually move it into the trust, but they wouldn't file it anywhere, right? So it was like, it's between you and me.
Yeah.
So
How's that work if you die though? Someone could dig that out.
well, I mean, that it would be. The beauty of having it at the courthouse is that hey, it's on file, right? But it'd be like, I think you can take you could take like a will and go put it on file, right? But
Okay, you just don't.
go there. So I don't.
What if you have it notarized?
Yeah, I would think notarized, and you've got copies, and you've got witnesses, and all those things. It would be valid, but it's not showing up, in the courthouse records. So
you're saying don't execute it, but have it.
Execute it, but don't file it. Yeah. So
Had it, but it's just like here, you hit it, pull the trigger to make it public.
Yeah. So again, I'm an attorney. I don't know that that's the right thing to do. But, and I realize I'm talking to people on the phone. Like I'm trying to help them. I'm trying to help them navigate through the mortgage process. But I'm like, look, we do not want to do mortgage fraud. I don't want to go to jail with you or for you or anything like that. So, ask your attorney. Had a couple of investors just yesterday. Yesterday? Yeah, I talked to them yesterday. And 2 buddies from the Army, from the Marines. They got out. One's working. One's in Colorado. One's here. And they've already bought 2 properties in the LLC. And one of the they wanted to do some things. I said, so you've got an LLC. Well, who's the attorney that put this together for you? Well, we found this form online. I'm like, oh, okay. So it may be perfectly fine, right? But I'm like, now's the time to fix stuff. You only got 2 properties. If you screwed it up, now's the perfect time. So I'm like, I know enough to be dangerous. I know enough to know that I don't know. So I really recommend that you talk to an attorney for you, right? And you may be perfectly right, but and it was weird because what he was trying to do is, one of the guys owned his house, primary residence, outright, wanted to refi cash out and move the house or sell it to the LLC. I'm like, well, technically we couldn't do it. You can't buy a house from yourself, right? So he is a 50-50 owner of the LLC, and he owns the property, and all that didn't work. And I said, what are you really trying to do? Right? So sometimes, trying to peel away what people are trying to do to find out, well, you're asking to do one thing, but you don't, I think there's a fundamental flaw in your strategy here. So, like, refi the house yourself, take the cash out, and then use that money to invest in the LLC in any way you want. Oh, right. So it's like, I don't know enough to be able to advise them. Trying to understand why they're putting it in the LLC. They're putting it in the LLC for some protection, but I don't know. I think that in my opinion, is that they should keep that particular house out of it, right? And then if they ever sell it and the next one they buy, then that's great. But it, trying to, it's, Paul and I talk all the time. It's like, well, as far as the part we do that's mortgages, we only do this much, but we spend this much time talking to people. It's like, well, I'm no expert, but compared to a lot of these folks, you realize how smart you are, or how much experience you've had anyway.
Mm-hmm.
I don't know about how smart, but how much, I've done that burned. I don't want to do that again.
Back to bragging.
Back to bragging. Like somebody's, nobody else can brag.
He's like, I'm smart, I'm losing weight, I'm...
Yes. I'm glad you noticed. Didn't even have to tell this time.
So, got it on tape.
I know. So anyway.
I think a lot of folks that's kind of the thing that they think we want to go buy investment property. Like, we got an LLC.
Mm-hmm.
So even if they're like, they don't know why they're doing it, like, LLC.
Yeah.
Yep.
So,
Yeah.
that's, some people, like, they want to put it all in one LLC,
Mm-hmm.
and there's different thoughts to it. Like, I don't have everything in one. There's some that this LLC does this, and this
Right.
LLC has some properties. Then once you get, probably when you get about 10, you need to jump and then make a new LLC. So it's fun at tax time, but it's more protection. And it's just, that's where that living, the invocable trust comes into play with the LLC, because you can scrub an LLC, pull names.
Right.
You can't really,
Yeah.
it's invisible, like you
Yeah.
can't touch
Right.
it, you can't
Yeah.
get into it.
Yeah. That's what what's
Kelly Johnson.
Kelly Johnson. Yeah, they did a seminar
Oh, they
at
got
their
a
office on the irrevocable trust with what was the twist? Irrevocable trust, and it was a.
With lemon.
What?
I just remember it.
It was something. It was a. I don't know. There was a just recall, but it was talking about how you put everything in there, and that was something that was different. Like a revocable trust, you can see the parties. There's a new law. I think that's something that you can see who owns that property. But if it's a irrevocable trust, then it's completely blind. It didn't make sense to me because I didn't know the first part. But they were like, oh, there's a change, and so now you can see who owns that house next to you. And it's, even if it is in a trust, you should be able to pierce that and see who the members are of that. But with the irrevocable, you can't. But,
Well, irrevocable though means it can't be reversed.
Mm-hmm.
So why would it have to do with you can't see it?
I don't know. The discussions around it were like, well, whatever law had changed had specifically left out the irrevocable part. So I don't know what allowed it in the first place.
It's not that somebody would try to like change anything. It's just if somebody didn't like you or you whatever, and they tried to sue you, the first thing the attorney's going to do is pull you to see what you own,
Right.
to see what assets you have, to see how much money they can squeeze out.
Right.
If you have an irrevocable trust and you have all your stuff in that, they're like, oh man, Karen just has this, little RV thing. That's it, and then they can't see your millions of dollars you really have. So that's why people do that for the most part.
Yeah, Karen, I know you got all those millions.
Got that Friday money.
So tell us, give us your pitch. What's your pitch for everybody?
Well, I guess since we're talking about investment properties, I work for New York Life, which is one of the, so it is the largest mutually owned insurance company, but with that, people don't realize. Oh, God, no.
Put something
You can
here.
say that too.
No, it's okay. Okay.
Well, we want our viewers and Facebook Live land to see your pretty face, so, right over there.
Okay, talking in front of groups, but if you're sitting.
How do you zoom on this thing?
That's Joey's.
So with that, we like to advise people if they're doing investment properties that you can use the cash value of your whole life insurance tax-free, and that helps you move money a lot quicker versus trying to do an equity loan. Sorry.
That's all right.
You know what I mean?
Oh yeah. Well, yeah. You're definitely
In this market, we had a lot of success with that in this market. You know, the houses at first were flying off, you know, in a day or two, and before you could get pre-approved or get anything working, your house was gone that you wanted. So with the life insurance, the cash value, it's as simple as, you know, you start an EFT and direct deposit into your account, no questions asked. It's your money. Spend it how you want, pay it back in.
And then after you do that, then you do something called delayed financing, so that you can put the money back in, so the investment is right back there. So I just want to make sure everybody.
That is an option. And
That's it.
Clear.
Yeah. Because oh, look at that. See, I didn't break stuff. She's breaking stuff.
Hair, I got more hair than you do.
It's true. It's true.
So with that, we rolled out a new product within the last couple of years that allows you to accumulate your cash value a lot quicker. Because obviously, if you start something small, you're gonna have like a few $1,000s. It's not enough. To where our newer product, you can front load it with extra assets, so it's moving your money out of taxes, out of the liability side of it, while also growing it. Depends on kind of what product you pick, but it's an option, so it's something that I like to try to pitch. It's hard to kind of shorten, but if there's ever like a situation where you have someone that's individually that has a larger asset amount and would like to look at doing something like that, it's actually really easy. It's just easier to look individually versus, I don't have a good example.
You have business cards with you?
No, because I have to order more.
She's waiting to get the address put on them for my
Exactly.
office.
The address. I did order more, so when they come in, I can drop them by, and I can also, wasn't really prepared, I can print out brochures that specifically targets that market of like investment properties and that kind of thing, and drop it off.
That'd be great.
Yeah, probably
Thank you,
summarize it
Sam.
a lot better than I just did.
Oh, you're great.
I will speak all day individually to people, but in front of groups, no.
Let's see if she's still in the microphone though. So
Don't make a lot of noise.
Joey will chase you down.
yeah.
He has a particular set of skills.
I'll bring it back. I don't want to.
So we're seeing more, you know, like the non-QM stuff, just more creative stuff that we're having to get good at. And it's like, oh yeah, when the times were really great, like yeah, we do FHA, you know, conventional VA. That's all we do. And it's like, yeah, we'll figure that out. We'll figure that out. So one of the DSCRs I have, I can do it in an LLC. You're still going to have to personally guarantee it, but you can actually close in the name of the LLC. And then
There's multiple LLC members. Do you need to pull all of their LLCs and ownership that they have and
if
everything?
they have to have more than if one person has more than 50%, we only need to have that one person guarantee it. If it's multiples, I honestly don't know the answer to that. I'd have to find out. We do need the operating agreement. I think that's what it's called.
Yep.
To know exactly what's going on. I had somebody. We did a DSCR refi cash out, and it was him, his wife, and his 4-year-old son. And so they had the percentages wonky because of the son, and so he was under 50%. And but so like I don't know. Well, that's where I'm not an attorney and doing that type of planning, but But we're all, I mean, doing them all over the country. That one was in Missouri, it was in St. Louis. So I'm licensed in Tennessee, Virginia, North Carolina, Georgia, South Carolina, and Louisiana. Don't ask me about Louisiana why. But then I'm in all those states, and this guy comes along as a referral, and he's in St. Louis, so we can do that. So I can do all 50 states if, you know. Texas, right? Texas is a little weird.
Alaska.
Hawaii. Alaska, Hawaii, yeah. I have to go out and visit those.
What
I
territory?
go see the properties in Hawaii.
Yeah, cause that's how Tim would spend $150,000. Not mine.
No,
Not
that's
mine.
exactly right. I've been, you know, Jessica's not here, but my GMC has been acting up again, transmission. And I'm like, okay, do I put new tires on it or do I trade it? And so I'm going looking at.
She was supposed to be here, but she's got clients here from Massachusetts, from Boston.
Ah.
And they were here this morning, and they left just before lunch and wanted to go look at more houses.
That's great.
It's-
So I realized that when I started looking at the price of cars, I like my truck and the transmission's cheap. That's where I'm at. That's where I'm at. So I put new tires on it, we're good to go. So, anyway,
Fixed.
yeah, fix that one. I just need to do a few more loans to fix that transmission. So if you know anybody, I would sure love to take care of it. So, anyway, golf, at least give me a golf clap. Yeah, there you go. Okay.
Now, going, we're gonna celebrate January
Okay.
birthdays.
Are you recording January birthdays or are you turning?
No, you can stop it.
They celebrate your birthday?
It's January.
It's Mike's birthday, roll.
When was that?
Lee.
December.